Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over all of your big news headlines today. What's really driving this market? A lot of comments from Lutnick, from Trump in regards to trade and secondary sanctions on Russia and blah, 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 blah. We're going to get into all of that in this video. We will also discuss the data dump coming tomorrow morning. We're going to get some important economic data that really we haven't gotten in a while. I will also give you an overview of the earnings lineup that we have for tomorrow as well. Ladies and gentlemen, first things first, hit that like button and subscribe to the channel. Secondly, if you guys have not joined the best trading community in the entire world, check out that link down below in the description of this video. Long story short, what we are doing is going out investing in smaller companies in AI and energy and biopharma, getting in at the ground floor level before Wall Street really understands the opportunities. I did this with Nebius. I bought that stock in the low 20s. Today it's 55. I bought IONQ, was one of the first to be bullish on quantum computing. IONQ, bought that at 7. Today it's in the mid 40s. Okay. Applied Digital data centers, I was one of the first to that trade as well. I bought Applied Digital at $3. Today it's over 10. I bought Novartis Semiconductors at $3. Today it's over 10. Come check that link out down below in the description of this video if you have not done so already. And on to today's episode. Now, also in the news today, U.S. trade negotiating team was seen leaving the venue after the first day of China talks. Also reported today, per the Financial Times, quote, the world has chickened out against Trump. Quote, only China and Canada have retaliated against the U.S. president's tariff war. U.S. Treasury spokesperson says U.S. and China talks have concluded for the day and will resume on Tuesday. Donald Trump has said he is considering a world tariff for 15 to 20% for most countries. I think that's kind of old news, and honestly, at this point, pretty priced in. Donald Trump actually recently suggested 10 to 15% for most countries that are just getting letters and not really negotiating. Now, French Wine and Spirits Federation says the EU-US trade deal is expected to confirm duty-free trade in spirits. Iran's foreign minister says if aggression is repeated, we will not hesitate to react in a more decisive manner and in a way that will be impossible to cover up. Russia's Medvedev says Trump should remember that Russia is not Israel or Iran. So kind of sounds like a threat here. Now, the reason I mention this is the big risk for markets at this point is the threat that Trump made about 100% tariffs on countries associated with buying Russian oil. That includes India, that includes China, that includes, again, like Iran and some other countries. The big threat would be if Trump put 100% tariff on China. Now, I think Trump likes stocks at all-time highs. I think Trump likes the economy roughly where it is. Like, I don't think he wants things to get worse from here. He's okay with posturing and sounding tough, but he doesn't want to actually cause irreversible damage, okay? And that's, again, one reason why I'm optimistic. We won't see those tariffs go into effect on China, but that is a risk in the next 30 days or so that the markets will have to contend with. Russia's Medvedev says Trump is playing a game of ultimatums with Russia. This is a step towards war. I mean, let's be honest, like there's no good outcome here. Russia not in a position to go to war from a military standpoint. They would stand no chance. That brings up the question of like nuclear weapons, and that's the last thing we want to deal with as a world or as a market's perspective. So we're gonna definitely watch some of the rhetoric here. I don't expect that it's gonna get worse, but it's always possible it could. And especially when markets are this bullish, you really want to pay attention to the risks, and this is one of them. The courts decline a U.S. tariff relief for low-cost goods, at least for now. Taiwan President La Ching-te is set to delay a proposed trip that included August stopover in the United States. Scott Bessent says by Q1 2026, we're going to see GDP growth at 3% or more. Which again is something I am quite bullish on, is the economy. You know, believe it or not, like take the trade situation out of it. The big beautiful bill in and of itself has a lot of very pro-growth initiatives, okay? The 100% deduction on CapEx is huge, like buying equipment, things like that. That takes it from 40% today to 100%. So how this really works is like, let's say you have a company, right? $1 million company. Let's say you have 10% margins, okay? So you're going to make $100,000 net profit you'd be taxed on. Well, perhaps if you're $1 million company, you can go out and get a $100,000 loan at 4%, right? 4% interest, and buy new equipment. That first year, you're going to be able to write off that $100,000 all the first year, potentially not even have to pay taxes at all. Okay, that is a huge incentive to invest in your business. More investing means more growth, means more jobs. Couple that with what should be lower interest rates in the next 12 to 18 months. That is a very big net positive to the economy and to the business world. You also have no tax on tips, no tax on overtime, which is anywhere from 60 to 80 million people in America. That's going to help, whether it's your main job, you work for tips, or you get overtime, or it's a side job, doesn't matter. You're going to save a lot of money there. And then also being able to write off interest on car loans is going to save like the average person like $400 on their tax bill. Like adding these things together with what should be lower interest rates in the next 12, 18 months, it's hard to be bearish on this economy if you understand the facts here. Now, Lyft's self-driving shuttles are coming to U.S. cities by 2026. Lyft has officially announced it will add autonomous shuttles to its ride-hailing network by the end of 2026, partnering with German supplier Banteller and mobility offshoot Holon to deploy full self-driving electric minibuses across key U.S. cities and airports. The White House says the EU will buy $750 billion in U.S. energy and invest $600 billion by 2028. The White House says the EU pledges no electronic transmission tax in the deal with the U.S. Germany Chancellor says time will show that EU tariffs are also not in the U.S. interest. German Chancellor Merz says U.S. tariffs present significant burden on German economy. And for anyone that cares about this, Trump has said he is allowed to give Maxwell a pardon. The whole Epstein's wife, yeah, she could get a pardon. Democrat senators pen a letter to U.S. Commerce Secretary Lutnick about resuming China chip sales. Senate Democrats are opposing resuming these China chip sales. But honestly, you have to let NVIDIA compete or they're going to lose the entire market. And is that better for the US to not have a market in China? Probably not. Pony AI gets a permit to provide driverless robotaxis in Shanghai. Now, being reported today as well, Trump freezes export controls to secure a trade deal with China. Keep in mind, they are currently negotiating. This is great news for the AI space. Chile's finance minister expects a copper tariff exemption. Chile won't retaliate against U.S. tariffs, the finance minister says. Canada's Prime Minister Carney asked about Trump's comments about the difficulty of negotiating a deal with Canada. He says, yes, we are difficult, but we are fighting for Canada. Carney reiterates that a U.S. trade deal without any tariffs is not likely. He says there's a question as to how large those tariffs would be. Carney says that trade talks with the U.S. are at an intense phase. Trump says we will make our own steel and aluminum. Trump on China says, I would love to see them open up their country. Trump on China says we're going to be settling a tariff for the rest of the world, and that's what they have to pay. Trump touts Russian rare earths as a potential trade product. Trump on Russia says, I am not so interested in talking to Putin anymore. I envisioned a lot of trade with Russia. Trump on Fed Chair Powell says, quote, he's leaving very soon. I'll miss him. Trump asked if Fed should cut rates this week. He says, I think it has to. So we'll see. It's not priced in at all by the markets. There is currently only a 4.3% chance of a rate cut next week and a 95.7% chance of a continued pause. Trump says we're doing well even without a rate cut. With a rate cut, we'll be doing better. Trump on Federal Reserve says a smart person would cut. Trump on Russia says he will confirm a new Russia deadline tonight or tomorrow. Trump on Russia says we're going to do secondary sanctions unless we make a deal. We might make a deal. You don't know. Trump says if Iran starts nuclear again, we'll wipe it out fast. Trump on Russia says I'm going to make a new deadline for about 10 or 12 days from today. Trump on Russia also says we just don't see any progress being made. Again, these are some of the comments that could be hurting markets today. It's hard to know exactly, but that would be my best guess, okay? And this is something that could develop into a larger issue for markets. We'll just have to pay attention to it. Now, today we had Dallas Fed Manufacturing Index that came in positive 0.9%. The expectation was negative 8%, and last month was negative 12.7%. So it came in much better than expected today. The 5-year bond auction came in a little on the high side, but not too bad also. Tomorrow, you get JOLTS job openings. We'll talk about this a little bit more in depth in the next video. Wholesale inventories, S&P Case-Shiller home price year over year, the goods trade balance, and some other smaller data sets, even a 7-year bond auction here that will be important. And yeah, you're going to get a new GDP report as well, or at least a new update. We get a GDP report, advanced numbers coming out later this week, but currently looks like GDP is running at about 2.4% according to the Atlanta Fed, with the last update on July 25th. So that's going to be a big update coming tomorrow. With that said, tomorrow we're going to have a lot of data coming out, and it's kind of twofold, okay? So you have the goods trades balance, advanced data for June. You're expecting a deficit of $98.4 billion, okay? That's important because it feeds into a new GDP update that we're going to get, okay? Q2 GDP is currently forecasted at 2.4%. Here's where it gets a little interesting. We have advanced GDP data coming out later this week. So not tomorrow, but later this week. So depending on what these inputs come in as, it's going to change the expectations for Q2 GDP, even in the report that we get this upcoming week. That's one reason why tomorrow is very important. You also get wholesale inventories month over month, retail inventories excluding autos, which all of these things to some degree feed into GDP. We have the S&P Case-Shiller home price year over year, home price index for May, home price index month over month, and year over year. We also get the JOLTS job openings. So you have the GDP side, you have that side, but you also get some data on the labor market. Okay, JOLTS job openings, think about it like this. If a company's looking to hire 5 employees, they're probably doing okay. Again, depending on the size of the company, there's other factors there, right? But generally speaking, the more companies are looking to hire, the better off they're doing. So tomorrow, you're expecting JOLTS job openings to fall from 7.769 million down to 7.55 million. The way the markets react negatively to tomorrow's economic data with JOLTS job openings, that's going to be the biggest piece of data tomorrow, is if the number comes in really low. If it comes in at like 7.2 million and we lost 500,000 job openings in a month, Wall Street's going to say, hey, is this the start of a larger labor market slowdown? That will be the risk coming tomorrow morning. That's what we need to be on the lookout for. Vice versa. If numbers come in relatively unchanged or they come in on the strong side, that's going to be a very good sign for the labor market and something stock should react favorably to. Now, at the same time, that data comes out at 10 o'clock in the morning. So at the same time as that, you will get the CB consumer confidence, expecting that to come in at about 95. Last month, it was at 93, so the stronger, the better. You also have a 7-year bond auction around 1 p.m., so there's going to be a lot. And the first rounds of data like goods trades balance comes out at 8:30 in the morning. And then at 10 o'clock in the morning, you get another round of data. And then even that 7-year bond auction at 1 p.m. could be kind of important considering, I mean, we have the Fed on Wednesday. Okay, so on Wednesday, you have the ADP employment change, the private payroll number, expecting positive 78,000 jobs. Last month was negative 33,000. So you want to see a good number there. If we get a bad number there, Wall Street's going to get a little bit more nervous about the economy. Remember this always for your investing journey, okay, on this planet. corrections happen because of fears of a recession, and crashes happen because of recessions, okay? Or like a very high likelihood of a recession. But if fears grow of a recession, that's what gives you corrections. So you don't want to see bad data, okay? You want to get good data, even if that means less Fed cuts or a Fed that is, on pause for longer, okay? So keep that in mind always. And I do think this week has the potential to either reaffirm the markets that there's no recession coming, or, we could go through a little bit more of a growth scare. I don't think a recession is coming, but could a growth scare come? Potentially. If we start to get even worse, labor market data, Wall Street's going to get a little bit nervous, okay? You have real consumer spending for Q2 as well coming out on Wednesday, a bunch of other secondary data points, and then the Fed. The Fed on Wednesday, one of the biggest catalysts for this week, because markets are expecting the Fed to cut rates in September. The current probabilities are 60.3% chance of a cut, 37.1% chance of a pause. Now, Donald Trump today said the Fed should cut rates this week, that he's optimistic that they will, but in all likelihood, that would come as a surprise to markets. There's only a 4.3% chance of a Fed cut and a 95.7% chance of a continued pause. So it doesn't look very likely. But then even, Thursday and Friday, we have a lot of big data. On Thursday, core PCE month over month, personal income month over month, and personal spending month over month will be coming out. We have Chicago PMIs and a lot of secondary data like initial jobless claims as well. On Friday, we have non-farm payrolls and the unemployment rate. Expecting non-farms to come in at about 110,000 and the unemployment rate to come in at about 4.2%, which is a little bit of a rise from last month's 4.1%. And then ISM manufacturing PMIs are expected at 49.5. Last month, you were at 49. So a bunch of data coming out. That's for sure. Now, we also are going to have a lot of earnings this week, like 30 or 40% of the S&P reports earnings this week. It's a huge week. Tomorrow, pre-market, United Health, SoFi, PayPal, Boeing, UPS, Spotify, Merck, P&G, Lithia Driveway, some smaller companies as well. In after hours tomorrow, Visa, Marathon Digital, Starbucks, Seagate, Booking Holdings, The Cheesecake Factory, Teradyne, FTAI Aviation, Caesars, and some others. I'll tell you, UPS is very important. Okay. UPS, FedEx, companies like that are seen as kind of bellwethers to the health of the economy, especially when there's been all of this fears of, tariffs and inflation and consumers slowing down and overall, growth concerns. A lot of Wall Street believes we're heading into a growth scare. UPS, if they say things are good, it's really hard to get a larger growth scare. Now, if UPS says things are slowing down, they're not great, I think that's the general perception right now on Wall Street. So I think there's actually a greater chance of an upside surprise from UPS perspective. Maybe UPS doesn't say things are as bad. Okay. But if UPS says things are kind of bad, we already expect that. So I don't think it's going to be too bad, but it can kind of dampen the broader markets. In a negative way, it can reaffirm some positive thoughts as well. Now, Tuesday and after hours, Visa, Marathon. Again, Visa, important bellwether kind of company to the economy. Visa is going to tell us in real time if the consumer is slowing down, if things are just fine, if they're not seeing much of a change. The last we heard from Visa, things were just fine. Now, we also have MasterCard Thursday pre-market. That's going to be another big one. Really, Wednesday and Thursday from a market cap perspective on the S&P is going to be huge with Meta and Microsoft and Qualcomm and Lam Research and Ford and ARM Wednesday and after hours. Thursday, you get Apple and Amazon. Just these handful of companies are 20% of the S&P, maybe a little bit more, right? I think just Apple, Amazon, Microsoft, and Meta are at least 20% of the S&P right there. Okay, even more in the NASDAQ. So just Wednesday and Thursday, the markets are going to move a lot. I really want to see what happens under the surface. If I think there's a risk that large cap tech, like the stocks we just mentioned, have priced in quite a bit of good news already, and you kind of need a shock and awe factor or catalyst when stocks are doing so well. It's kind of like Netflix. Netflix had good earnings. They did well. They, kind of raised guidance from that perspective. There were some things you could nitpick about their numbers that were not exactly great, like margins, right? But generally, A reports, maybe A- report on Netflix. The stock had just went up so much, it still fell after earnings, whereas it otherwise probably should have continued to go higher. That is some of the risk with big tech and with the markets. What happens, though, to the internals of the markets if big tech sells off? If big tech sells off and small caps rally and other areas of this market do well, that would actually be a very healthy sign for markets. Again, considering we do have this risk of secondary tariffs being put on countries like China because of the war in Russia. So that is something I just want to see how the markets respond to this earnings season. It'll tell us a lot more, again, about the health of markets. But keep in mind, stocks generally have been kind of melting up, just going straight up. Stocks tend to take, what do they call it, the escalator up and the elevator down. I think there is a risk, that Wall Street's getting a little bullish here, and we could see some downside corrective behavior. It's not a guarantee that that's going to happen. I think stocks could make their way to the 650 level before you're getting a little on the stretchy side. But it is a risk at any moment just because we've went up so consistently now. I will tell you the RSI is actually down today after hitting a new all-time high, down from about 77.5 down to 73.74. So the RSI, once it gets overbought on the S&P, tends to get into the 80s before you see a larger kind of corrective phase. So I don't think a larger correction is in store, but it wouldn't surprise me if we get some sideways kind of 2 to 3% volatile trading days, like not 2 to 3% days in and of themselves, but like a range of like 2-3% from here. Wouldn't surprise me at all if we kind of ping pong back and forth for a bit before we make kind of that last leg higher into the end of the year, November, December-ish. And seasonality in August and September is also not ideal for the bulls. So keep that in mind. Ladies and gentlemen, that is going to conclude today's episode. Hit that like button and subscribe to the channel. Check out the link down below in the description of this video for the trading community. If you have not done so already, it is the best community in the entire world. I'm confident in just that. You guys have a great rest of your day, and I will see you in the next one.